Welcome to the first episode of Ryan's Real Estate Roundtable. I have Mike Cathy here with Hamilton Funding.
How are you doing?
Good. How are you?
Good.
Thanks for coming on the show. I know you're a busy guy,
Thanks for having me.
Let's get started. Tell us a little about yourself. Who are you? What company you're with?
Well,
your background on mortgage.
Mike Cathy, like you said. I'm with Hamilton Group Funding, and I'm a mortgage loan officer. This is my 5th year.
Oh, great.
And so the past couple of years, I've been in Champions Club. I finished up number 3 in the country.
That is impressive.
This past year.
The race to 100.
The race to 100, yes.
Mike, you did over 100 loans last year, right?
104, yes.
Wow, that's impressive.
Service with a
So
smile.
we have the expert here.
Yeah. I wouldn't go that far, but...
So, Mike, I'm just gonna outline today's discussion, and then we'll just go into some details.
Okay.
First, we're gonna go over getting pre-approved, the importance of it, and then second, we're gonna go over, now that I do get pre-approved, what do I do? Now I've worked so hard for this pre-approval, I don't know what to do.
Okay.
So we're gonna get started. If I want to get pre-approved, where do I start? What does that look like?
Well, first talk to me.
Yes.
And there's a set of questions that I'll go by with you. It's either over the phone, through email, text.
Okay.
Basically, do you own a home? Have you purchased a home before? I kind of get a feel of what documents I'm going to need from you.
Okay.
And then from there, it's a quick email to send you the loan application link.
Oh, great.
Click on it. You fill it out. It takes about 10 minutes. And then throughout the process of the loan application, it'll kind of give you what documents you'll need. In the email I send with the details, I'll have some documents as well. It's like W-2s, most
so
recent
just simple
pay stubs,
documents.
Simple stuff to get started. And then, if throughout the process, the application and running credit, I see some things that we might need more documentation on.
Yeah.
That's when I ask for further stuff.
Things come up.
Things do come up.
No one has the perfect credit. If you're watching this, you don't have perfect credit. I don't have perfect credit. No one has it.
Exactly.
And mistakes happen.
That's right.
So our second question here is, what are the steps involved in the application process? So you kind of went over it. You have to provide paperwork, and then you have to just put in like your name, social.
It's name, job, residency, where you live.
Okay.
Then it goes into questions like, are you a veteran? If you're not a veteran, then guide you to another portal. So it's kind of like if you've ever done TurboTax, it's kind of cool because it takes you step by step of the different items that you need.
And then it redirects you
exactly
per your situation.
It asks you, have you been divorced? If you've been divorced, then it asks you child support, alimony, stuff like that.
Yeah.
If you had a bankruptcy, then it takes you to another thing about bankruptcy. How long have you had a bankruptcy? How long ago was it? So.
Well, that's great because we're not all the same. So, each application is going to be a little different per person. So that's awesome. So you mentioned VA loans in there. Mm-hmm. The next topic we're going to go on is typically there's the 4 major loans: conventional, FHA, VA, and USDA. Mm-hmm. Even though USDA is not quite as common in the Orlando metro, but maybe if you go out towards Lakeland or north, south, anywhere really outside of Orlando, you could get a lot of USDA deals. Mm-hmm. But let's focus on first conventional and FHA. So if I'm a buyer, why should I go conventional or FHA?
So when I run credit, that's when I look to make the decision.
Okay.
Typically, anything under 700 credit score, I typically look to put toward FHA. It depends on how much you want to put down as well.
Right.
FHA, you can put as little down as 3.5%.
Yep.
Throughout the life of the loan, though, you're going to have mortgage insurance.
So you'll have what we call PMI.
PMI, personal or private mortgage insurance.
Mm-hmm.
So that's with FHA. With conventional, you can put little down as 3% if you're a first-time home buyer, or if you haven't owned a home in your name for over 3 years.
Yes.
And that also has mortgage insurance, but it'll fall off once you get 20% equity or you've had the house for 10 years.
So let's talk about mortgage insurance. So the mortgage insurance is pretty much to protect the bank just in case you default. Correct?
Correct.
So on FHA, that never drops.
Correct.
So that is a factor that you have to take in when thinking about FHA versus conventional, because over the life of a loan, conventional could be a much cheaper option. Mm-hmm. So at conventional, once you hit that 80%, I recall, then it just drops off.
You can get in touch with, if it's before the 10 years, you can get in touch with the lending company, and you can let them know, hey, look, I think the value of my home has gone up. Mm-hmm. And then they'll most likely want an appraisal. Yep. So order appraisal. If you have that 20%, then they'll knock it off.
And if you know it's going to appraise for higher, that appraisal is well worth it.
Mm-hmm. Or you can also refinance to get it off as well. Typically what people do is when they get into an FHA or conventional loan where they have private mortgage PMI, what happens is they'll end up refinancing anyway, and then in a couple of years, of course, depending on rates, but just to get rid of that mortgage insurance.
Yeah, because no one wants to pay for that if you don't have to.
Exactly.
Okay, great. So the next section is, what should my credit look like before qualifying for a mortgage?
Well, I never like to rule anybody out.
Right.
I know,
everyone is case by case.
Exactly. Some lenders want certain, loan officers want a certain amount. I'll talk to somebody that has a 500 credit score.
Right.
And just to help them, because you never know, in 6 months you could get them there to where they can buy. So I never like to rule anybody out.
Okay.
We can go as low as 580, 560, depends on what's going on with the credit, and how much they have down. Of course, the lower the credit score, the more risk, so the more money they're going to want up front. Out
of pocket up front, correct. And that's a great, actually, topic is a lot of people think that you just have to put 20% down because that's the old model. That's what our parents did, that's what their parents did, but that's not the case anymore. People, the banks are realizing that people aren't having, that much liquid capital in their bank accounts.
Exactly.
They can't just purchase a home with 20% down with student loans and everything different now. So that is a common misconception. You can go as low as 3% on conventional. So let's talk about errors on credit reports. I know both of us have come across many people with errors. Let's say a great one is I had a client who had a Progressive, that little thing you plug in your car. They forgot to send it back. So Progressive put a collections on them for it. And it totally ruined their pre-approvals process. So what do you recommend for people if they see that error on the report?
Call the collection company, call the company. A lot of people don't realize that you pay a collection, it'll still stay on your credit report. So you'll still pull it out, it'll say zero balance, but the collection's still on there, it's still attached. I tell people that do have collections before they call and pay it, or before they pay it, to talk to the collection company and see if they'll completely remove it. You completely remove it, it'll shoot your credit up, the score up 20, 30, sometimes 40 points.
And that could make the difference between a pre-approval or denial.
Exactly.
Just for a Progressive plug-in. Who knew? So be careful. So what is the difference between a pre-qualification and a pre-approval?
A pre-qualification is more of a talking to somebody on the phone.
Right.
Getting their income, asking them what their credit score may be, just a quick brief synopsis, and then giving them a pre-qualification of, you'd be qualified for this much money.
Yeah, but they still get the piece of paper.
They still get the piece of paper. There's some things you have to look on there, and I always let realtors that I work with, even if they're listing the home and they get a pre-approval letter, send it to me, because a lot of times there's some stuff on there that'll say, we still need your W-2s, your pay stubs, or we have not run it through desktop underwriter.
And that's an important thing for sellers and buyers to understand, is that just because you have the piece of paper doesn't make your offer that strong. You could have someone else who has a pre-approval and they've met a lot of these conditions that Mike asks for. So a lot of the time, whenever I work with Mike, we make sure that the buyer has been verified on income with tax statements and W-2s or whatever you need from them. And I go into the offer with that because that has some value with the listing agent. If I'm the buyer's agent, I can go to the listing agent and say, well, we will close. Here, this is a guarantee. We have everything for these guys. Like, we know that the loan is not going to have any issues. But if you have a pre-qualification, you might not have met some of those standards, right?
Exactly. And that's what I tell clients and realtors that I work with. The realtor's times are valuable.
Yes.
You don't get paid for the gas you spend showing 10 houses on a Saturday or every time.
You do not.
And so a pre-qualification, I could go into the bank right now and tell them I make $30,000, a bank, and tell them I make $30,000 a month.
Right.
And they'll give me a letter stating, but I like to do the full pre-approval. And even though it takes more time and it's more upfront for the buyer, it also helps out the realtor. You know, and it helps out the buyer also.
Tremendously.
Not wasting their time and going to see $500,000 houses when they're only qualified for $300,000.
Right. Because no one wants to see a $300,000 house after you've seen a $500,000.
Then
that's
they
just
get
disappointing.
Discouraged. Exactly. Exactly.
Well, that's great. So yes, it is very imperative that you get the full pre-approval process before you start shopping, because that really adds some value, especially when you're negotiating. It could actually monetarily affect your offer.
Exactly. And I have listing agents that call me and ask about the pre-approval, and I tell them, I've run this, I've done this, and this, and they're solid. And it'll win a deal over another,
That's a great note. When I'm the listing agent, I will call. I don't skip a beat. I want to know what I'm walking into because I don't know the buyer if I'm helping the seller. So if I can go in there with a little more knowledge, that helps me, my seller, and the buyer because they don't want to waste their time either in escrow if it's just going to fall apart at the end. Great. So I think we've covered everything to get pre-approved and the beginning process. Now that we are pre-approved, so I get a pre-approval from you, what happens? So could you explain the loan process after pre-approval? Once I go under contract and Ryan, as my agent, gives you the contract and says, here you go, we're under contract. They found the house they love and we're ready to start closing on it.
So the next process is to get the loan package signed.
Okay.
So you'd get the loan package signed that gets sent out by the lender. Once that's signed, during that time you're going through inspection period.
Right.
So once the loan package is signed, it then moves to the processor.
Yep.
The processor gets the file. They review everything.
Okay.
They come back with any items that may be missed, that they see that the underwriter may want. It's kind of like a step before underwriting, and then we get those documents, one or two things collected.
So they're kind of like the big brother. They make sure you're good to go before you actually go through that door.
Exactly.
Because once you go through that door, there's really no going back, right?
Exactly. So they kind of clean up the file and make sure some stuff's in there that needs to be in there. Other stuff that didn't need to be in there gets taken out.
Yep.
And then once the processing review gets done, we get those items collected, whatever they may be. Then it goes to underwriting. During that time, inspection goes well. Yep. We'll order the appraisal, and so during the appraisal time, when the appraisal's ordered and it's going through those steps, then the underwriter's looking at the file. The underwriter comes back with maybe one thing, maybe 5 things. Typically, it's not that much because I've done my due diligence. The processor's done their due diligence, and then we get the items needed for the underwriter. And then once that happens, am I getting ahead?
No, you're good.
Once that happens, then we go to final underwriting. The initial closing disclosure goes out, 3 business days prior to closing. And then we get the clear to close, get the final CD, closing disclosure out, and then it's the happy day of closing.
Yeah.
Yeah.
And you have Mike to walk you through the whole time. He holds your hand and you never feel lost. And you also have me. So on the agent side, like you said, we have the inspection period. So there's no point moving forward with the loan if the house has, let's say, a million things wrong with it.
Exactly.
So if you don't like that house, you're not going to waste time and effort going through that process. So we'll typically in Orlando or Central Florida is about a 10-day inspection period. The contract allots for about 15, but you're looking at about 10 if you want to compete, with a good offer. So after that 10-day, then, let's say everything's good. Let's say you only need a couple of small things. You either decide, I'll fix them myself, or the seller says, hey, I'll fix it for you. It just depends per house. And then once that's all settled, then you move on to the appraisal. Mike, you order it, correct?
Correct.
So you as the buyer, you will sign a form. Mike will order it for you. You don't have to worry about that. And then Mike also helps with, recommending insurance because you have to eventually get insurance on the property. To close on the loan, and then we get our favorite word, clear to close.
Clear to close.
That's our favorite word. That should be yours too.
Yes.
So let's look here. If what additional documents? So once I send you in the pre-approval stage or the pre-qualification approval before we get under contract, I have to give you my tax documents, all of my social, all that information. What further information when we do send out the loan package will you typically need from an average person?
From an average person, typically we'll need the copy of the EMD, the deposit.
Yep.
And then what we'll need a bank transaction summary or statement showing that money leaving the account. So making sure that it leaves the account that the check copy is with, and it's your account.
Yes.
If it's not your account, then we have to get a gift letter and all that fun stuff.
And that's regulated by the government, correct? They want to
Correct.
see that there's no money laundering because that's essentially what they're looking for.
That's right.
Very good, very good. So let's talk a little bit about the appraisal. How does it work? Who orders it? You order it. We just went over that.
We order the appraisal from, it's called Appraisal Management Company, AMC, to shorten it. So what we do is we go ahead and order it. Then the Appraisal Management Company basically puts a broadcast, puts a email out to the local appraisers in that area where the house is, and then an appraiser picks it up. The appraiser will then contact the listing agent, set up a time to come to the house and appraise it, and then after that, the appraiser works on the report, and we get the report back. And that typically, I'd say it takes about 7 to 10 business days from order to getting the report back.
Yep. And then once we do get the report back on the agent side, we always hope that it's at the contract price. Let's say you go under contract for $350,000, but sometimes, and it happens. I think our last deal, it happened, came out about $5,000 below, which was a shocker. And sometimes it will shock you. We still get to this day. You can run the comps all you want, but if you have 10 different appraisals, you're going to get 10 different numbers. It's a complete opinion of the appraiser. So you have really two options in that case. You can either negotiate with the seller and come up with a price. So like in a lot of cases, they'll split it. So let's say it's $5,000. Seller will come down $2,500, and the buyer will do out-of-pocket cash because you can't get a loan for that extra amount. You have to come out with cash of $2,500 to make that $5,000 gap. Or you also have the option of canceling the deal, which does sometimes happen because people, they don't agree sometimes. Big surprise. Yes. So let's talk about everything that's included in my payment. So I have my mortgage. And then we talked about the insurance, and that's going to be, is that going to be paid through my monthly mortgage payment, or will I have a separate?
So your mortgage, which is paying off the loan.
Yep.
Then you have interest. And then you have insurance.
Okay.
You have taxes. And then PMI. And then if there's a homeowners association, that's paid separately.
Yes.
But on your loan file to count against your debt to income, we have to add that in there to the monthly payment.
As the monthly payment.
Yep.
Great. So for taxes, so that's all included in there. They don't have to worry about paying anything.
It's escrowed.
Yep. So it's escrowed monthly for you. So you don't have to write a check at the end of the year for your taxes. Right there every month. You can't miss it. So I think we have pretty much covered everything. This is about everything you'll need to know to get pre-approved and the process on the buyer and seller end, kind of how everybody works together. Thank you, Mike. I appreciate you coming on the show. I know you're a busy guy with those 100 loans, so
Appreciate it.
Thank you.
Thank you.